Hope you are having a great time. So today's topic is understanding the different assets class. So ultimately it's all about how to invest and where to invest and how to find out the investment way of investment. So first of all, in this context, I'll talk about what are the different assets class and why the investment is important. And then I'll take you through the investment in the equity market as I'm closely tracking the equity market day in, day out. So friend, my name is Chandan Tapadia. I'm heading technical and derivatives research at Motilal Oswal, having experience of more than 1 decade, having the passion for the markets. And I keep on doing intermarket analysis from the one assets class to other assets class. And I follow many thumb rules to find out the trading momentum and the finding out the right theme at the right time. So today we will talk from the basics to the advanced level part, that why investment, ultimately why this is required, and how we can focus on the equity part as well, and what is going to be. So I'm not only going to only the different assets class. I'll also talk about what is the outlook for the Indian market going forward, not only in 2022 but in 2023 and so on. Disclaimer for everything that this is for educational and the awareness point of view. So friends, when I talk about the investment, the first question comes, why to invest? So friend, let me tell you, if I look at the list of the Forbes 50, I only see two kinds of people are there. First, those who started their business and now they are having the business kingdom and they are ruling the world. Second, those who are the partner of these businessmen and they are enjoying the benefits and they are ruling the world. So there are only two types of person into the Forbes 50. First, those who started the company and enjoying in their respective field, and second, those who are the partners of the company. And investment and the equity provides that kind of beauty to be in this market scenario. So when I talk about why to invest, first, put your money to work, use the power of compounding, and fight against inflation. So you must be knowing, if you are keeping your 2,000 rupees note in a drawer, and if you get it after 1 year in the same drawer, what will you get? You might see 2,000 note, same note you might see, but in actual after 1 year, the 2,000 is the myth. The real value of the 2,000 is lower because of the inflation. And that is the main reason that we need to work hard. We need to invest our money so that money grow and we can at least defeat the inflation. If I just take a simple example, a couple of years back, we used to give 100 rupees, 200 rupees to our kids. That used to be the big money. Now even there is no value of rupees 500 or 2,000. So you could understand and you know it better that the value of money is continuously falling down. So if you have to defeat the inflation, your capital has to grow. And to grow the capital, you need to put your money onto the investment. So your money makes money for yourself. So friends, hope each and everyone is working hard. They have invested either in their studies, knowledge, and they are being rewarded if they are working for someone else, or else they have invested, they are doing their business, and they are being rewarded as a profit of the business. So ultimately, if you ask, or if I just reply into the nutshell, investment is all about, I'm working, I want my money to work for me. That is all about the investment. So we are convinced that investment is very important because we want our money to work for us. I cannot work alone because I have 24 hours in a day. I want my money to work. So me and my saving both work together and comparatively we make more money. And as we know that power of compounding is the eighth wonder of the world. So that works into the investment part. We will also understand how it goes. And then again, fight against the inflation is important thing. And this is the main reason that so many people are working tirelessly. And that is how the country or economy grows as a whole. Now the question is, what are the reasons for investment? Increasing values, protecting from inflation, stable and the safe income. Everyone is looking for the financial freedoms. See, we are in the independent country, India. We are proud citizens of this nation. We have got freedom in 1947. Now the next aim is, are we financial freedom? And that is the aim of each and everyone. Once you are financial freedom, then you can talk about the luxury and other things. So investment is the only way which can help you to get the financial freedoms. So stable and safe income, and sometimes you need to invest to save the taxes. You know about the ATC and other the taxes slaves. To get that benefit, you need to invest. So these are the reasons that you need to keep your money. But now the question is, we know investment is very important, but where to invest? Which assets class to select for the investment? So put your money to work harder than you. That is all about the investment. The saving is not enough. Investment helps you to your money to grow. Growth in corpus and generate wealth, meet your financial goals, survive increasing cost of living and beat the inflation, and secure future against any kind of financial uncertainty in the crisis. Just one example, in last 2 years, everyone was worried from the pandemic COVID. So if you were having the savings or investment, even if you are not working anywhere, your investment help you to at least get the security, at least help you to survive into the life. So this is why you need to understand the importance of the investment. And I'm sure after the open up themes and after everything when gets normalized, people are working so hard so that they don't see any kind of trouble into the life. And I'm sure people who are working on go office goer, they are looking now, they are planning their retirement life, how they'll retire, when they will retire, how much money they need to invest, and how much corpus they need to select. Now, there are so many different assets class. We need to understand which assets class and what are the advantage and the disadvantage of these assets class, and what should be the real asset allocations part. So friends, when you select the assets allocation, first you need to look at the time horizon. Are you looking for few months, few years, or few decades? What is your risk appetite? It depends on person to person. You might be the risk taker, other might not be. And it sometimes depends on the age profile as well. If you are younger, you no need to worry about your risk part. If you are young, you should take more risk. But if your age is more, you should look more on the safety part. Then you must be looking what is your risk and what is your reward. If you're investing, how much is the downside, how much is the drawdown, how much is the upside? Then what is your investment goal? Many people might be investing for the retirement plan. Many people might be investing for the kids' education, for the marriage of the kids, to get some luxuries or necessities, to buying a home. So all these might be the reason for the investment. So before any kind of investment part, first you should focus on a couple of things, that what are these requirements, and then you can go for the selective assets class. Now you need to understand, we should understand about the assets class. And one more reason for the putting money into the different assets class is the rule of the diversifications. You can't put your money into the one assets class. You have to put in a different assets class. Just for an example, we have FD, fixed deposit. You can put your money into the FD. You'll get some percentage of a return. But the concern is, if you're putting your money in FD, you are getting 6-7%. So in that, you can't beat your inflations. And the rule of investment is, at least first you should beat the inflations. You can go and buy gold, you can buy the property, you can put in the mutual fund or the direct equity, you can buy the forex by buying the USD INR and all. So but you should diversify your money. Let's say if you are having 10 lakhs rupees, you can't put your entire money into the equity markets. You can put in the FD, you can put in the liquid, you can buy some gold, or you can give into the FD. Because at the time of crisis, if you know, your equity may not perform, your gold will perform. So that gives somehow hedge when you diversify from one assets class to the other assets class. You get the hedging activity by default as well. Now, when I talk about the risk, as I mentioned, that you need to keep a couple of things in mind, including your risk, time horizon, risk reward, and goal. Risk is very important. Without understanding the risk reward ratio, you should not go for investment part. And there are two types of risk. One is the market risk, that is also known as the systematic risk. Second is the unsystematic risk. So systematic risk is not specific to any company or industry. It cannot be eliminated or reduced through the diversifications. But unsystematic risk is specific to the company industry and can be reduced by taking the diversification exposure. So, like let's say you are investing into the particular company and interest rate or war or exchange rates are changing. There is a concern, you cannot avoid that. But let's say you have taken one company and company is not performing, that you can mitigate your risk by taking some exposure to the other company. Let's say you have invested into capital goods and capital goods stocks are not growing well. You can buy to the, let's say, telecoms or the infra or the IT. There is called unsystematic risk, which can be somehow mitigate. Now, let's understand the different types of investment classes. You can go with the FD, you can go with the bonds, gold, stocks, and then mutual fund, PPF, exchange traded fund, NPS, real assets. So before talking about any assets class, first you need to understand what is investment all about. Investment is all about I am working, I want my money to work hard so I can get the financial freedoms or I can get necessity in the life, right? Then you should be looking at the risk part, goal, time horizon of the investment part, right? And each and every factor should keep in mind for selecting any kind of assets class. So when I talk about the FD is known as the risk-free return part, but again, the return is less. You cannot beat the inflation with the return of FD. So let's say you are going with the your fixed deposit in the banks or the post office government schemes. So you'll be getting some, and nowadays the government post office schemes gives you the double money in 8 years, 7 months something. So your money goes double in 9 years, and we don't have that kind of patience nowadays. Earlier, when people were not aware about the different assets class, they used to put their money into the post office. Many people might be keeping money in drawer, but that is not good for you and economy. More the money flow into the system, more the growth of any country is likely to be. If you're putting your 1 lakh rupees in a drawer, that is now treated as an unproductive assets class. If you give that money to the bank, you'll get some interest. Bank will give that money to the loan to some industry. Industry will generate the business. They will give to the salary. They will pay to the taxes to the governments. And then again, they pay to the salary. Then salary goes to the market. Again, market buy something, sell something. This is how the transaction happens into any kind of financial economy. So you should not keep your money idle. You should put somewhere. So at least the rotation of money keeps on happening, and that is very important for any kind of growing or developing nations. You can buy the government bonds or companies bond. You can buy gold. But when you buy the gold, you should be keeping a couple of things on mind. Purity about the gold, how much you can buy. There might be the limit for buying golds. Then safety of the gold. Then making charges and all. Now, other assets class, you have stocks you can buy. If you don't know about the stock selections, you can go with the mutual funds. Fund manager will do on behalf of that, and you'll be getting the NAV proportions. Then PPF is there. People buy ETF, NPS, and you can buy the property also. But buying property is not cup of tea of each and every one. To buy the property, at least you have to work hard for a few years, then only you can buy. So these are the assets class you need to keep in mind. What are the advantages and the disadvantages? If you trust me, the equity is the best assets class given in any scenario. But yes, risk is there. If you're putting money in equity market, the risk is there. But if you look at the Indian markets, it has really rewarded well. If anyone has put the money into the blue chip or the Hayward's counter, which have really done well. Even if you look at the indices, whether you talk about the Nifty, that also given the good return in last 1 decade. When I talk about the real estate, you can buy one flat, but you can't buy two or three or four. Again, bid ask is different. When you're selling the flat, price may be different. When you're buying, price will be different. Even you don't get the yield on your investment part. Now, as I mentioned, the question is where to invest, because we are talking about selection of the assets classes. So as I mentioned, you can go with the currencies, gold, properties, bonds, foreign currencies, stock market, FD, and all. Okay, now, as I mentioned, the type of assets class: fixed income, real estate, gold, equity, cash and cash equivalents. Now, as I mentioned, case, if you put your money into the case, that may not return you, but good when your any assets class is not working. But I've noticed when nothing works, your gold works. When nothing works, your USD INR moves up. So that you can plan or keep in mind. But what I suggest here, at least you should do the diversification of your assets class. Now, you can diversify further into the assets class by company, sector, and geopolitical reason. Now we are turning into the equity parts. We believe that as of now, you are with me that equity is the best assets class. So you should be knowing which sector, which company, and how much percentage. Let's say you have 10 lakh rupees. You decided to put your money into the equity markets. Now the question is which company to buy, which sector to buy, how much allocation should be given to the each and every individual companies, that you need to keep in mind. Okay. Now, when you are looking for the investor mind, assets class case, risk is high, your time horizon is short. In the stock market, risk medium, reward medium. Real estate, also the risk is there, time horizon is bigger if you have to put your money into the investment. Now, I am just trying to explain you the characteristic of assets class based on the three scenario: return versus liquidity versus safety. So when I put our money into the bonds or the NSC or FD, saving banks or government bonds, my return is low, liquidity is medium, but safety is high. So if you are looking for more safety, you can go with these type of assets class, but you need to understand, if you're looking for safety, your return will be lesser. Your risk and reward goes in tandem. If you're looking for the high safety, if you're looking for lesser risk, definitely your reward will also be lesser. If you ask me what is your best scenario, if given the scenario, I want to put money into the assets class which probably has very less risk and has more return comparatively. I'm sure everyone is looking for the risk, but there is not much easy comparatively. Now, if you look at for other assets class, you can go with ULIP or insurance product or infra companies, blue chip companies. Return is medium, safety is medium, liquidity is low to high. You can go with the mutual funds, debenture, corporate bond, CP, CD, treasury bond. Return is medium, safety is also medium. Then you can go with the IPO and direct investment equity. Return is high, safety is low to medium, liquidity is low to medium. You can go with the CDs or swaps or derivatives. Return is high, but risk is high, safety is very low. Many people are trading in options and they are buying in future. You might get good return if that particular trade setup works in favor of your view. But again, if you talk about the safety or risk, the risk is high. So I mean to say risk and reward both goes in hand to hand. But you should be selecting as per your appetite, your investment horizons, your risk to reward ratio and all. Now you can go with the derivatives parts. You can go with, yeah. So before I talk about this, first you should be looking at the magic of power of compounding. And this is very important. So given this scenario, as I mentioned you, why should you invest? There are three reasons. If I go to the slide number 1, there are three reasons for me to invest, right? What are those three reasons? Putting your money to work, power of compounding, and fight against inflation. So here now we are talking about the power of compounding. Power of compounding means your money grows money. Let's say if you put 1 lakh rupees in investment and you are getting 25% return, then in 3 years, that is not 1 lakh 75,000, that is going to 1.95 lakhs. Because on 1 year, if you are getting 25%, your money will be 1 lakh 25,000. The next time, there will be the 25% return on 1 lakh 25,000. So if you put just 1 lakh rupees and if you get 25% return on CAGR basis, in 10 years your money will be near to 10 times. This is called the power of compounding, right? In 20 years that will be near to 86 lakh rupees. In 30 years, if you are investing 1 lakh rupees and every year if you are getting 25% return, in 30 years that will be nearly 8 crore rupees. If I ask you what is your goal, people might be asking, I'm looking 10 crore, 20 crore, 50 crore, 100 crores. What you need to do, you need to start invest early and consistently. If you do that, I've just taken an example of 25% return. Even if you're getting 25% return, that means 2% per month, 0.5% per week. In 30 years, your money will be 1 lakh to 8 crore. This is the power of compounding. In 10 years, it will be 1 lakh to 10 lakhs. This is called the power of compounding. And that is the reason that you should invest in the markets. You should invest in any kind of asset class, whatever suits to you. So just for an example, the market capital of the Reliance is 14 lakhs crore. Why so? Power of compounding. The base is increasing, they are growing with the rising base. So compounding keeps on happening, and that makes this company to be like this. Yeah. Rule of 72, like if you want to know how much years will be taken to get your money double. So let's say if you are getting 12% return, 72 by 12, rule of 72. This is called rule of 72. 72 divided by 12. Like in 6 years, your money will be double. If you're getting 6% rate of interest, it will take 12 years for your money to double. So this is your, you can understand it. Now, many people must be asking, and they might ask that my age is 30 years or the 40 years or the 60 years, how much money I invest? And I follow some basic rule that 100 minus your age, that should be allocated to your risky part. Rest you can allocate to your less risky part. So let's say if your age is 20 years, 100 minus 20, 80 rupees. 80% you can put into the risky part because you are quite young. You can dare to take the risk. You want to grow more because you are looking for more return. So you should be putting 80% into the equity part. Rest 20% you can put in FD, gold, and other things. If your age is 30 years, 70% you can put into the mutual funds or high risk kind of activities. 30% you should be looking for FD or the safer investment side. If your age is 50 years, you should be going with 50% on your stock market, which is known as high risk. 50% you should be looking at the safety point of view for FD and all. Okay, so whatever you do, you take the calculated risk, right? So now let me take to one more PPT. I want to explain you a couple of more things here with you, right? Just a minute. Yeah. So we talked about these concepts, right? Now, what exactly happens? Many people are worried what is going to happen. But I understand into the equity market that downs are temporary, ups are permanent. You look at the Indian markets, whether the COVID-19 or the Demon or the India surgical strikes, whether the China and the India's Doklam issues, people must forget about that, right? Even we forget about the South Korea and North Korea. We forget about the surgical strike. We don't even remember about the Brexit and the GST. So market is own flavor. Even we were earlier worried about the Joe Biden and the Trump. We were earlier worried about the COVID. So market is own passion. Market has habit to make its own flavor nowadays. We are worried from Ukraine. So Indian market is emerging as the best sport or best country as a whole, given the scenarios. We have recovered well in terms of the economy. Many companies have gone multifold to those pent-up demands. Even we were worried about the elections, we were worried about the GST. Things keep on happening and passing. You need to focus where to invest, which companies to invest. Market is on way to be into. Then factors which are underperforming GDP, oil prices, COVID, right? Sector which are positive, comparatively okay, inflations, lower interest rate, stimulus package, comparatively stable currencies. Right. Now, whenever you talk about the equity markets, we know that it's better to invest into the equity, but the question is which companies, which sectors. So you should be looking at the business. At Motilal Oswal, we follow the QZLP process. QZLP, quality of the management, growth of the business, longevity, and the price. And try to put in the business which are going to survive for next couple of decades. Try to focus on the company which are with the matching scenario, which are with the growing technologies. So you should be looking at the companies which are with the advisory tool or the brand and marketing and the knowledge and the collaborations. Even the e-commerce business can do well. You should be focused on the diversifications, business safe, API, e-commerce, because Google is not your search engine, it's your wearable technology in the driverless car. Imagine this. So these are just examples. You should be looking at the companies which are going to work and which are diversifying and where you also apply the QGLP. Now, many people ask, what should you invest into the market? So, like you can go with the auto or the pharma or the ITs. You can apply the common sense of investment. Like try to buy the companies in which you are the loyal customers. Know your brands, understand. You may ask when to invest. Anytime is a good time for investment in the business. You can, if you don't know about the equity markets directly, you can plan with your SIPs and the mutual funds. If you know the business and company, you can directly go with that. But at least start. You cannot catch at the bottom, you cannot sell at the top. You need to find out, you need to understand the markets, and then you need to put your money. If you don't know this, you can go with the SIP and the mutual funds. But better you start early, right? Or early you start, that is better for you. And you have seen how power of compounding. If you're putting 1 lakh rupees on work and if you're getting 25%, in 10 years it will be 10 times. In 20 years it will be more than 80, 90 times. This is the power of compounding, but you need to invest, then only it is going to work. New mindset, new results. You can focus on a couple of sectors, right? You can follow the top to down approach if you're looking for your stock selections technique. Look at the market trend. So first of all, look at the index price behavior, then look at the sector, then look at the stocks. Then diversifications and the risk management is very important. You can select your own way. You can go with the SIP and the mutual funds. Be with the trend, right? If you are trading, don't mix your trading and investment. If you are investing, don't mix your trading. So make the disciplined way, right? You can put your money for taxation part. Whatever you invest, make a plan, select your time frames, do the analysis, money management, do the back testing, maintain in general, and then important is exit and stress management. So guys, that's all from my side about the stock selections, different assets class, and why you should focus on to the equity market comparatively and other assets class as a whole. You can stay connected with me as well on my Twitter handle at Chandan. We are always happy to help you. And I also take the opportunity to say a word of thanks to NSDL and the entire team of Merlin, who are really doing a great job for the investor awareness. And I also take the opportunity to say a word of thanks to each and everyone who are spending the time on this Friday evening out of your busy schedules. And definitely, the way we talked about the different assets class, that must have given you the roadmap or food for thoughts that what should be the investment, why should you go with the investment, and how investment can help you to get the financial freedoms if that is done in the proper way. So that's all from my side. Marlene, over to you.
Thank you, Chandan sir, for this wonderful presentation and meaningful insights that you have given to all our participants.